Hey guys, Max here, and the markets weren't too happy yesterday. We saw some major declines in some big cap stocks. The indexes fell slightly as well, as we've come to expect. Absolute chaos in Russia as everything falls apart for them too. Now, stocks falling is actually a bit of a reversal from the day before. Sentiment was actually quite strong as the day started, but it obviously didn't stay that way. But what actually happened? Well, the S&P 500 fell about 0.5%, but the Nasdaq took a larger tumble, declining by 1.5%. The Dow Jones did a bit better and only saw a loss of 0.3% for the day, so American equities weren't too happy for the most part. Now, what led to those declines? Well, tech stocks for the most part. Tesla fell 4.6%, Amazon fell 2.7%, and Microsoft was down 1.5% as well. Most tech wasn't too hot. I've seen some people claim that this is because of the war in Ukraine and the impact that might have on these companies, but I'm not so sure that's the case. It is true that these companies will miss out on some revenues and growth in the future from the changing environment. Lots of these companies are already halting or reducing their dealings in Russia. It's unlikely that Tesla is going to be selling many cars there, for example, but Russia is a pretty small and unimportant country and market to these tech giants, and I don't think investors are fearful that Tesla's only going to grow 49% instead of 50% next earnings because they weren't able to sell 500 cars to Russian oligarchs. Now, what is looking a little bit more likely is that the investing environment just isn't looking too bright right now. I know, a huge surprise to hear that coming from me. I've been saying the markets are overvalued and the economy isn't as strong as the Fed would have you believe now for months. But before the war kicked off, the markets were worrying about this stuff too. Inflation is stupidly high, and we've sort of just forgotten that over the last week as we've been a little bit too busy with the Ukraine news, but inflation is going to keep getting worse, so much worse, and that's not good for the economy. The worst thing about it is that it means that the Fed is going to have to hike rates month after month after month just to stop us entering a period of super high inflation, and even then, it probably won't be enough. Stagflation is starting to look more and more likely as everything slows down a bit as this inflation takes off, and that's not great for stocks in general either, and it's especially not good for tech. Now, I think we're just seeing the market recalibrate a little bit right now, recognizing once again that lots of stocks are still overvalued, not all of them mind you, but those valuations are still going to come down. A good example of this over the last couple of days is Snowflake, a stock that someone might say is based on hype or growth or tech or whatever word you want to call it, the type of company basically that Cathie Wood would like. They sell software to businesses and they've been growing like crazy and they still are growing like crazy, almost 100% every year, which no one is going to turn their noses up at. The problem is, it was priced as though it would grow at that exact rate forever, and it just isn't. It just had its earnings report and it's projecting to grow its revenues by only 67% this year, which is still absolutely huge and a massive success, but the stock fell 15% on that news because it's representative of a slowdown in the business itself and that type of industry. A lot of people don't seem to understand this. There are tons of threads on Reddit full of people who think that if a company grows, its share price must go up as well. But these people fail to see the bigger picture, that the monetary environment a company is a part of matters on top, and maybe the stock was just a little bit overvalued before. Either way, these types of companies have been getting hammered for almost a year now. Snowflake is alone down 34% over 2022 and 44% from its all-time highs. In my opinion, the poor Nasdaq performance isn't really about Ukraine. Yes, the added inflation isn't good, no doubt, but these declines we've seen before Ukraine and we'll keep seeing them after Ukraine as well. Now, in Europe, markets were a little bit worse than in the US, and the reason for this is pretty simple. The sanctions and the direct impacts of the war in Ukraine are going to hit Europe harder than the US. There are already almost 1 million refugees from Ukraine in EU countries. Natural gas prices in Europe are 3 times higher than what they were a couple of months ago. And European banks have a lot of exposure to Russian banks, as do just a lot of normal European companies. It makes sense then that the FTSE 100 fell by more than 2% and the Stoxx 600 fell by almost 2%. Inflation in Europe is bad on top of that. Not quite as bad as it is in the US right now, but that may well change shortly as prices are going to spike majorly and of course markets are worried about that. The state of Russia is obviously really bad as well, and we shouldn't be expecting that to get better anytime soon. Individual companies and organizations have continued to take action against Russia. Michelin will no longer award their coveted stars to Russian restaurants, and the World's Organization for Cat Shows has banned Russian cats from competing. Now, I know those both sound like completely unsubstantial and irrelevant measures, and let's be clear, they are, but they are representative of the wider attempt, and a successful attempt at that, to isolate Russia in the wake of this war. These measures on their own won't really change anything. They won't make Putin worry about the state of his economy or an uprising from within, but thousands of these measures all put together just might actually put some fear into his mind. The Russian economy is really hurting. The markets aren't going to open until next Tuesday now, but we'll probably see more delays before then. And actually, Russia is struggling to even offload their oil as well right now. It's trading at a $25 a barrel discount compared to the rest of the world. Now, what's happening in the world of crypto? Well, by and large, crypto saw some decently sized decreases over the last day or two. Bitcoin has rebounded up and down between the mid-30s and mid-$40,000 mark. And just a day or two ago, Bitcoin was sitting at $44,000. But over the last day, it fell a fair amount and it's now sitting at $40,000. Ethereum moved in the same direction as you might expect it to, and it's currently sitting at about $2,700. The markets are just seeing some standard correlation to other risk-on assets like tech stocks, so not an awful lot to write home about. Now, in the terrifying world of oil prices, we actually saw a decrease in oil by over 2%, which is very nice to see. Sadly though, that's a 2% fall after a 100% rise, so prices are still very high. WTI crude is sitting at about $108 a barrel, and Brent crude is sitting very high as well at $114 a barrel. Gold prices are in a similar sort of place right now, very high compared to where they were a month ago, but not quite at the highs of this peak. After losing a little bit in the last few days, gold is currently sitting at about $1,940 an ounce. Once again now, bonds have seen a slightly difficult day, with the markets unsure of how to price them. The US 10-year Treasury yield fell by about 3 basis points and it now sits at 1.85%. The German 10-year is just staying positive with a yield of 0.02%. Yields are mostly staying lower than they were starting to get before the war in Ukraine kicked off, as most investors seek some safety in their portfolios. Now, one quick thing to note before we finish is that right now, as I'm finishing making up this video for the day, there are a lot of fears surrounding the Russian shelling and bombing of a major nuclear plant in Ukraine. Now, to be perfectly honest, this is far beyond my expertise. I just about know the basics of how a nuclear plant is run back from my days of A-level physics. But the consensus amongst experts is that this bombing is grossly irresponsible and it's very dangerous and it could lead to a catastrophe many times worse than Chernobyl, which is worrying for markets as you would expect. Whether or not it will actually get to that point, who knows, but if it does progress that way, if Russian bombs do somehow cause a massive failure and radioactive material to be spread all over the place, markets will not like it at all and will almost definitely tank. Again, I'm not going to pretend to know how bad the nuclear disaster would be or how far it might spread or anything like that, but I do know that the Russian army is playing with fire and it won't be Russia who suffers should this go the wrong way. I will be back with another update on the war in Ukraine tomorrow, letting you all know the state of what's going on the ground, what's happening. Again, I've had a bunch of people commenting telling me not to do those videos, but I am going to make that video. You don't have to watch it, you can just not click on that video, or if you do click on it, within 10 seconds I will have told you the topic of conversation, so you can just click off. If you enjoyed this video though, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.